Imagine waking up one morning to find cash is no longer king. Your wallet isn't filled with bills, but with an app on your phone, one issued directly by the US government. Every dollar you spend, save, or send flows through a digital system monitored in real time. This isn't science fiction. It's the future many believe is just around the corner: the digital dollar. For years, the Federal Reserve has quietly studied the idea of a central bank digital currency, or CBDC. Other countries are already moving fast. China has tested its digital yuan. The European Union is planning its own. And now the question hangs heavy over America. Is a US CBDC coming soon? The stakes are enormous. Supporters say it could make payments faster, cheaper, and safer. Critics warn it could hand the government unprecedented power over your money. This isn't just another financial experiment. A digital dollar could reshape everything, from how you buy groceries to how Wall Street moves trillions. So let's dive into the truth about CBDCs, the promises, the risks, and whether America is ready for the money of the future. So what exactly is a CBDC? A central bank digital currency is not Bitcoin. It's not a stablecoin created by a private company. And it's definitely not the dollars sitting in your bank account right now. A CBDC is money issued directly by the central bank. In America's case, the Federal Reserve. Think of it as digital cash. Instead of paper bills or coins, it's a government-backed token stored on your phone, instantly transferable anywhere, anytime. Here's the difference. When you use your bank card today, the money flows through layers: your bank, the payment processor, the Federal Reserve System. With a CBDC, there are no layers. It's a direct line between you and the Fed. That could mean faster payments, no fees for transfers, and instant settlement. Imagine sending money to a family member across the country, and they get it in seconds, not days. Imagine businesses paying employees instantly, without payroll delays. But the very thing that makes CBDCs efficient also makes them controversial. Because if every transaction flows through the central bank, it means unprecedented visibility and possibly control over how money is used. In other words, the digital dollar could revolutionize the financial system, or fundamentally change your relationship with money in ways we've never seen before. So why would the US even consider creating a digital dollar? The answer has several layers. First, global competition. China has already launched pilot programs for its digital yuan, testing it in cities and even using it for cross-border trade. If the world's second-largest economy moves fast, the US risks falling behind in shaping the future of money. A digital dollar would help America maintain influence in global finance. Second, efficiency. The current payment system is slow and expensive. Wire transfers can take days. International payments often involve hidden fees. CBDCs promise instant settlement, moving trillions with the click of a button, cutting costs for both businesses and consumers. Third, financial inclusion. Millions of Americans don't have access to traditional banks. A CBDC could give them a free, secure digital wallet directly from the government, allowing them to participate fully in the economy without costly middlemen. And finally, control. Cryptocurrencies like Bitcoin have exploded in popularity, challenging traditional finance. Stablecoins now move billions daily. A digital dollar could reassert government control, offering a regulated alternative that pulls people back into the official system. In short, the digital dollar isn't just about technology. It's about power: who controls money, who sets the rules, and who gets left behind if America doesn't adapt. But behind every promise lies a shadow, and critics warn that with power comes the risk of abuse. For every promise of a digital dollar, there's a fear that keeps people awake at night. The biggest one: surveillance. With a CBDC, every transaction could, in theory, be tracked by the government. No more cash payments in secret. No more anonymous purchases. For some, that sounds like a nightmare, a world where privacy and money is gone forever. Then there's control. Imagine if the government could freeze your digital wallet with the push of a button, or limit what you spend money on. In China's digital yuan system, there are reports of programmable features, funds that expire if not used by a certain date. Critics worry the same could happen in the US. Another fear: cybersecurity. A system that centralizes trillions of dollars would become the biggest target for hackers in history. If breached, the damage could be catastrophic. And don't forget banks. If people can hold digital dollars directly with the Fed, why keep money in commercial banks at all? That could destabilize the entire financial industry, shifting power away from Wall Street to Washington. Supporters call these fears exaggerated. Critics call them inevitable. Either way, the question remains. Do the benefits of speed, efficiency, and inclusion outweigh the risks of surveillance and control? Because once the digital dollar launches, there may be no going back. Supporters of a digital dollar argue that the benefits are too big to ignore. First, speed and cost. Today, moving money can be painfully slow. Paychecks take days to clear. Wire transfers across borders get stuck in limbo. With a CBDC, money could move instantly, 24 hours a day, 7 days a week, with no middleman skimming fees along the way. Second, financial inclusion. Tens of millions of Americans don't have checking accounts. For them, paying bills, cashing checks, or sending money often means high fees at check cashing services or payday lenders. A government-issued digital wallet could give every citizen direct, free access to the financial system. Third, stability. Private stablecoins have exploded in popularity, but they're not always backed by transparent reserves. A digital dollar, by contrast, would carry the full faith and credit of the U.S. government, offering trust that no private token can match. And fourth, innovation. Just like the internet transformed communication, a CBDC could transform finance. Smart contracts, programmable payments, and real-time settlement could unlock opportunities we can't yet imagine, from automated rent collection to instantly disbursing disaster relief. To its supporters, the digital dollar isn't about control. It's about modernization, a necessary upgrade for an outdated financial system. But to its critics, modernization is just another word for surveillance. The truth, as always, lies in the tension between promise and peril. So where does the U.S. actually stand on the digital dollar? Unlike China, America has been cautious. The Federal Reserve has released research papers, held public hearings, and even run small experiments. But so far, it hasn't committed to a full launch. Why the hesitation? Because the stakes are enormous. A CBDC wouldn't just be a new app or payment system. It would reshape the backbone of the world's largest economy. A single misstep could destabilize markets, threaten banks, or spark a political firestorm. Meanwhile, Congress is divided. Some lawmakers push hard for innovation, warning that if the U.S. doesn't move soon, it risks losing influence as the world adopts other digital currencies. Others resist fiercely, arguing that a digital dollar could become a tool of government overreach and erode personal freedoms. And then there's the private sector. Banks worry a CBDC could drain deposits. Tech companies see both opportunity and threat. Cryptocurrency advocates call it both validation and competition. All the while, ordinary Americans are left wondering, will the cash in my pocket one day be replaced by a government app on my phone? The truth is, no one knows when or if the digital dollar will arrive. But every month, every pilot abroad, every congressional hearing brings it closer to reality. Because once one major economy makes the leap, the pressure on others will be impossible to ignore. So what would life actually look like in a world with a digital dollar? Picture this. It's Friday morning, and your paycheck hits your wallet instantly at midnight. No waiting for banks to process. No funds pending. The money is there the moment you earn it. You stop at a coffee shop. Instead of swiping a card, you scan your phone. The payment settles instantly. No hidden fees, no delay. The shopkeeper sees the funds immediately in their account. Later, you send money to your sister in another state. Today, that transfer might take days. With a digital dollar, it's instant, no middleman, no waiting. Even taxes change. Imagine getting a refund processed within hours instead of months. Imagine disaster relief funds delivered to victims' wallets the same day a storm hits. For many, this world sounds like progress. Faster, cheaper, simpler. A financial system that finally works as smoothly as the technology we use every day. But here's the catch. The same system that gives you speed also gives the government oversight. Every payment is visible. Every transaction is recorded. Privacy could become a luxury of the past. The future of the digital dollar is not just about efficiency. It's about what we gain and what we risk losing when money itself becomes data. Supporters call the digital dollar a revolution. Critics call it a Trojan horse. On one side, advocates say it's the next logical step. Money is already digital, they argue. Most dollars exist as numbers on a screen, not paper in your pocket. A CBDC would simply make the system faster, safer, and more inclusive. On the other side, opponents see something darker. A tool that could be used to monitor spending, freeze wallets, or even dictate what you can and cannot buy. They warn that programmable money could one day mean government deciding if your dollars expire or blocking certain transactions they don't like. It's a battle between freedom and control, efficiency and privacy, innovation and risk. And caught in the middle are ordinary Americans, people who just want money they can trust. Will the digital dollar empower them, giving access and opportunity like never before? Or will it strip away the very independence that cash once guaranteed? The debate is fierce, and the clock is ticking, because the world isn't waiting. As other nations roll out their digital currencies, pressure on the US grows stronger by the day. So the real question isn't just if a digital dollar is coming. It's whether you're ready for what it means when it does. For more than 2 centuries, the US dollar has been the foundation of global finance. It powered empires, fueled wars, built industries, and defined trust. But money, like history, never stands still. The digital dollar could be the next chapter, a tool that makes life faster, simpler, and more connected. Or it could be the beginning of something more unsettling, a world where every penny is tracked and every transaction is watched. No one knows exactly when, or if, the digital dollar will arrive. But one thing is certain, the debate is no longer theoretical. It's happening in boardrooms, in Congress, and in central banks around the globe. And soon, it may happen in your pocket. The question isn't just whether America will launch a CBDC. It's whether you're ready for the consequences, good or bad. Because once money becomes code, the line between freedom and control becomes thinner than ever. History will remember this moment as the time when we chose to cling to the old system or to step boldly and carefully into a digital future. The digital dollar could reshape not only how we pay, but who we are as a society. And the only question left is, when it comes, will you embrace it or resist it?